What is up everyone, it's Vlad the Crypto Trader here. Today we're going to cover one of the basic tools which you should have in your trading arsenal, the Trading Logbook. And why is it so important for you? It actually allows you over time to go over your patterns and maximize on your strengths and of course diminish your weaknesses. But how does the logbook actually allow you to do this, you may ask? And the thing is, if you keep writing in your logbook, not of course after one trade, after 5 trades, maybe even after 10 trades, that won't be enough. But after months of trading, after months of actually writing down these trades, you'll start seeing patterns such as which strategies work best for you. You can even look at your longs and short performance and see maybe you are underperforming on shorts, so maybe short less. And we're not going to cover it in this video, but you can go as crazy as looking at the time of the day in which you're trading performance in past and readjust to actually just trade at that time, for instance. So those are some of the benefits of having a trading logbook, which we are going to sit down today and finally do it. So that was it for the intro. Definitely stick around if you want to find out more. So this is the trading logbook right here. First and foremost, I'd like to shout out Live Traders. Live Traders is a great channel in case you're trying to improve your trading. Jared here provided an excellent inspiration for me. I was going over this video and honestly, I've just been running away from having a trading logbook. I just don't see the point of it. I think it's too much effort to log all the trades. But on the other hand, the part of me that says, Vlad, you need to do this the right way, knows that a trading logbook is essential. And I was watching this video and I came across this and I thought it was perfect. It was simple. And what I did, I mean, it's nothing new. So I just copied literally what we saw in the video right there. It doesn't take too much time to log everything down, to put everything down. But at the same time, it gives you these three numbers right here, which we're going to go a bit further on, and what they actually mean, of course. But all of this data then allows you to get to these numbers, and these numbers actually allow you to look deeper into your trading, again, deeper into the things that you're doing right and the things that you're doing wrong, measuring them and readjusting your trading strategy so that at the end of the year we end up with more capital than otherwise. Of course, this is the entire goal of it all. So as we can see right here, we have the date of the year, so date, month, year, the ticker, and in this case I have it loss and win. This is because we the trading logbook right now has the logic for both a loss on a long, a win on a long, and the same case for shorts. So we have two long cases, two short cases, and a win and a loss for each other, for both. Then of course the entry quantity, the entry price, your stop loss, your exit quantity. I've assumed for this example that you would enter with the same amount you'd exit with, and then the exit price. So of course there'll be some slippage along the way, actually most of the time, and so the stop price is kind of your perfect scenario stop loss, and the exit price is your actual stop loss as you've exited after the trade was done. This is then reflected in your stop size and in the points. And what took me some time to figure out was this logic right here, which essentially is a bit difficult because of the short, because on the short the logic is kind of inverted, right? So if you just keep the same formulas that you have, then you get all the numbers, but opposite. So you get a minus when you want a plus. And well, let's not go over it in too much detail, but the logic is right. I got it. It took me some time. That's the only thing I want to share with you. But yeah, it's correct. And having in mind that we have the hypothetical risk of 100, then these points are turned into the profit and your risk units of R. Of course, both here, your R in this case is your sum, and then having your R times your risk, which is your 1 unit of R, then gives you the total profit. But I'm actually more interested into this left side up here. So we have the total number of trades, of course it's 4, so it counts. how many trades you've had, how many wins based on your R right here, and same goes for the losses. So if the loss is negative, then it counts the amount of R. Also, and this where it starts getting interesting, it goes over, so when we win, how many R do we win on average? And of course, our average loser here should be around 1 R, because in theory and in practice, we should risk 1 unit of R in each trade. And these values then affect our Sharpe ratio, which is indeed the average winner over your average loser, essentially. So, of course, your average loser in theory should be 1.00, but again, because our exit price is never perfect, this value will be a bit above 1, and we can actually see this effect reflected in our Sharpe ratio right here. And as you can see, the formula, as I've told you, is your winner over your loser here. So this is actually a great Sharpe ratio. This means that for every trade, your risk to reward is 1.6. So every time you pull the trigger, your average risk reward is 1.6. You might be personally happy with that. You might be unhappy with that. But then you can't look at this number. You can't look at this number in a vacuum. You also have to take into account the baiting average, and the baiting average is essentially how many times you are right, how many times do you win. And as you can see here, so it's our number of wins over our total amount of trades. In this case, sitting at 50% right here. So these two numbers together then form your trading performance, essentially. So one tells you how often are you right, and the other one is telling you what is your risk to reward on any given trade. And last but not least here, I'd like to go over the average return, which is one small thing that I added myself. And the average return, as you can see here, is your total amount of R over your total amount of trades. So in this scenario is 0.32%. And that essentially means keep on trading, keep on doing what you're doing, that you'll get to your goals eventually. Or of course, you might not be happy with this number. Maybe you want to get it to 0.5. And this is where you need to go a bit deeper into the logbook. You can look at things such, for example, the day. So break it down into Monday, Tuesday, Wednesday, Thursday, Friday. Also the time of the day. Then you could look at, for example, combinations. What is your performance for these numbers on the first 3 days of the week? Are your trading results dipping on a Friday just before you leave? Also, we could include here the long and short ratio. Are you stronger on the long side? Are you a really good shorter? So we could really look at these stats because they are essentially statistics about your own trading. And as I've said in the beginning, look at what you're doing right and maximize that, and also diminish the things that you're doing wrong. So then you could improve these 3 numbers, I would say, and end your trading balance with a bigger amount at the end of the year, which is why we're doing all of this in the first place. This is not supposed to be a painful exercise. This should just be a habit. And not only writing all of this down, but also going over this data right here, these numbers, and crunching them down, measuring them as we have, and readjust our strategy based on what we see right here. So I got a bit carried away there, but I hope you understand the value of a trading logbook, and definitely leave a comment if you have any pending questions. Also, I'd like to invite you to our Discord channel, a few looks at trading charts there. So if you're all about that, definitely check it out. And if you're still here, I'm really glad that you've made it this far. I really appreciate it. So that was the bit trading logbook. As you saw, nothing out of this world, but hopefully it'll actually improve your trading performance. And if you have not been doing this, it's definitely a step forward to maybe start doing this. Of course, it may take its time, but you're definitely on the right track if you're watching this video. I would also like to add that I would be more than happy to go with you through this logbook if you don't understand something, and even go with you through your own trades once you fill in this logbook after some time. Again, if you don't know where to find this trading logbook, it's right in the description down below, so definitely check it out. And as always, I hope you found some value in this video. Definitely leave a like and subscribe to my channel to let me know that you did. And as always, I hope you take care and see you the next time around.